Well, folks, we have another red day on our hands right now, at least as of now. I mean, it's only 12 p.m., so a lot of things could change, but as of now, we have the Russell and the S&P. Each of them are down 1% as the Nasdaq's down 1.4, and we have the Dow pretty much down about 0.7% as the VIX is up over 4%. So VIX is, continuing to creep up, guys, which is something that I've been talking about here on the channel. So in this video, we're going to break down the markets. We're going to talk stocks. So without further ado, hit that like button, subscribe, take a sip of your water, guys. Stay hydrated as always. And by the way, Moomoo has upped the ante. Before you could get up to 15 stocks, now you could get up to 20 stocks for a limited time. Use that link down below, deposit at least $100, and you get some free stocks, and it also helps out the channel. I appreciate you guys as always. So again, markets are selling off all across the board right now. We have the Russell, the S&P, the Nasdaq, the Dow. Everything's selling off. The VIX is up. We even have the metals moving down right now. Actually, they're pretty flat. Gold's up a little bit, but, they're slowing down as they've been ripping the past couple of days. I'm sure you guys have seen. So right now, SPY's approaching a very critical point, which I talked about a little bit yesterday, and we'll talk more about it right now. This is the point of, let's just say, this is kind of like the last straw right now for the bulls. If SPY fails at $390, which is right by the 180 SMA here on this 4-hour chart, and I have zoomed in a little bit here, guys, so you can see, I'll zoom in again, right? If this point fails, we start going down to 385, $380. That's going to be the trend breaking. And you all know at this point, and that would not be good for the bulls, obviously, right? And you all know at this point, we are in a bear market, right? And on the yearly chart, we are getting rejected in real time right now at a big resistance, right? So it's pretty much the last straw right now for the bulls, right? If we fail at that point, there is going to be, in my eyes, more downside, especially if 380 breaks. I mean, right now we're above 395, so that's, we have a little bit of a ways to go to get to 380, but if this really starts accelerating under 390, especially under 380, man, the selling is going to really notch up at that point, in my opinion, and for that reason, I'm being very cautious right now because we haven't really gotten direction above, obviously, this downtrend on the yearly chart. And that goes for triple Q as well, which we'll go into here in a minute. So I just set my alert at 380 on SPY on the downside here. I might as well put another one at $390 a share. Market, not 3,090. That probably take decades to get to. What was it? $390. Market is at or below 390 a share. And going over here to triple Q, right? We've been talking about this a lot, guys, so you're probably getting tired of me saying this stuff, but it's reality. It's what's happening. We're clearly still in a downtrend. We've gotten rejected at this 180 SMA on the yearly chart. And on the 4-hour chart, guys, we're under, let me see here. Are we under both moving averages? I believe we are. No, we're holding on above the 180 by a thread right now, which, honestly, if this gives, and my alert is already at 278, if this gives, we break 280, 278, we fill the gap to 273. If that were to break as well, man, this is going to really start to sell off quickly at that point, right? We're not fully there yet, though. We're not collapsing completely quite yet, but like I said, SPY, triple Q, these are both holding on by a thread. And we can see the VIX. I've talked about this like crazy on the channel. The VIX is now starting to creep up another 4%, and it's now it's up about 15% in just the past 2.5 days at this point. So VIX is starting to creep up. It's not fully breaking out. It's not fully, going to the mid-20s, high 20s, or any crazy move like that quite yet, but it's creeping up. That's all you got to realize. It's creeping up, and you have to keep your eyes on it as we're heading into these next couple of days. And we have crude oil. We might as well pull that up. Crude oil right now at about noon on the East Coast is down like crazy. It's down another 3%. Now it's actually about to test the low from a couple of days ago. When was that exactly? About a week ago, we hit 73.60 a barrel on oil. You guys see that right here. We saw a bit of a relief rally like expected. We don't just move in a straight down line, guys. That's not how this works. We saw a bit of a relief rally, 14%, 13%. And obviously, we've given back all that gain pretty much, right? This is down from about 82 a barrel to now 74 a barrel. in just about a day and 18 hours. I mean, this is insane. We took the stairs up, elevator down clearly on this. It took about a week and a half to run up 13%. Now in just a day and a half, it's lost 10%. So yeah, clearly bears are still in charge on oil 100%. And in my eyes, guys, I don't want to say 100% with certainty, because you can't do that. There's no way you could be 100% certain on something that's going to happen in the future. You have no idea. But I'm just going to say this. I think it's going to take the lows out. By the looks of it, we're probably going to take the lows out. Not 100% sure, but in my opinion, I'm pretty dang confident by the looks of this chart right now. Oil wants to go, I'm not saying under 70 quite yet, although it could do that. But it's probably going to go to 70, 71, 71.50, 72 a barrel. That's in the short term. That's my take. I could be wrong. I've been wrong before, and I'm not scared to admit when I'm wrong. But, in the short term, I think I'm going to be right on that. We'll see. I don't know. What do you guys think? As always, I'd love to know your thoughts in the comments. And if you're finding value and you haven't done so already, hit that like button. Make sure to subscribe. Share this video. It all helps me out in the YouTube algorithm, and I appreciate each and every one of you out there that's tuning in. Seriously, this wouldn't be possible. The Stas Talk Stocks channel, the Stas Talks Money channel, which we just started, right? Make sure to go subscribe. None of this would be possible without you guys. I appreciate you. I cannot say it enough. So let's see some stocks here. The Chinese stocks continue to inch up day after day after day with everything going on over there in China, which we're not really going to get into in this video, but we will talk about what's going on with their stocks. Starting off with Tencent today, which is up 2.5%. And now officially, guys, Tencent is breaking out of the highs as of today, and it looks like yesterday too. It's breaking out of the highs from the middle of November, which were around 39, 39.50, 39.75 a share. So in my eyes now, Tencent is on its way to the mid 40s, right? $43. That was the high from the end of August. If that were to break from there, 47, 47.50, this is where we could be going. So sure, these Chinese stocks, I mean, they could turn on a dime. You got to keep that in mind. They're very, they're very risky. Of course, investing in anything that's Chinese, there's heightened risk there. And I personally own Baba and Neo. I've owned Neo for years, Baba now for about probably a year and a half. And I've been buying. I haven't bought Neo in a long time. But Baba, I've been buying a little bit, throughout the course of this year, right? I haven't really bought Baba much either in the past 2-3 months, but it's one that I've been holding, right? And there's heightened risk, no doubt about it. But in the short term, with the way the charts are looking, we're not really getting any sign of a sell-off. In fact, it looks like we're breaking old resistance points, recent resistance points, and the chart wants to go higher. That's at least what I'm seeing right here on Tencent. We could be going up to, again, the low mid 40s. A stock like JD, which we've talked about on the channel, right? This is also starting to break out. You guys can see here, well, it's been breaking out. But now we're slowly taking out the highs from the middle of November, being about, 60, 59 bucks. And we're battling with it right now. We're slightly under 60 a share on JD. But, I think it's, potentially going to retake that point, 60, 61, and then maybe start to make a move towards the mid-high 60s, which you guys can see that's where the stock was in the beginning of the year, middle of the year. I mean, a couple months ago, that's where it could be going again. And this is this Chinese stock has had one heck of a move, guys, from 33 bucks to now almost 60. It's almost doubled up in the span of 45 days. I mean, that is insane. JD went from 33 bucks and it hit almost 62. For it to obviously for it to double up, it's got to get to 66, but guys, we're pretty dang close. We're right there. So this looks very good. I think this could continue, in my opinion. Momentum is clearly there. And Alibaba, which again, like I said, this is one that I own as a long-term play. But even now as a short-term move, short-term play, it looks decent. We have an inverse head and shoulders, like I called out, is playing out. We're at a multi-week high. We're, playing in this range between 90 bucks to about 100, 105 bucks. Let's see how it plays out. I think it looks pretty decent, compared to a lot of other stocks out there, at least in the short term. But like I said, please, guys, do your own research, do your own due diligence, make your own decisions based off of your research and due diligence, because these Chinese stocks, they're very risky. And full disclosure, I'm down a good amount on Alibaba, percentage-wise. It's a speculative position. It always has been, but I'm down a good amount. I don't really remember exactly at this point. I haven't checked in a couple of weeks. Like I said, I haven't bought Baba in, 2-3 months. And I've said this on the channel before, with long-term accounts, guys, I'm not checking these accounts every single day. And you guys probably don't do that either. You'll drive yourself insane, especially during a bear market, if you're constantly checking whether it be your retirement account, your taxable long-term account, whatever it may be. If you're constantly checking it day after day after day, you're going to be more prone to making irrational decisions in a bear market, right? So for me, guys, with my long-term accounts, I do the buys, whatever. When I want to buy something, sure, I'm watching charts all the time, every day, obviously, but logging into the actual long-term account and looking at all the numbers and, looking at this, I don't do that every day. I mean, and I don't think people should do that. I mean, unless, they're running a hedge fund or, managing a bunch of other people's money, which I don't do that. But, what am I trying to get at here? If you're a long-term investor, right, just do your buys and kind of, I don't want to say completely forget about it. If you want to be more active and be more involved, sure, be involved and look at the charts, keep up with the news and do all that stuff. But, maybe not logging in every day could help you out, and looking at the red that you're seeing in your portfolio every day, that'll help you out psychologically, right? And that's kind of what I do. I buy, if I want to buy VOO, if I want to buy VXUS, if I want to buy Alibaba, if I want to buy more Google, if I want to buy Adobe stock, I'll do it. And of course, there's a bunch of other ones. I'll do it, and then I'll just put it in the filing cabinet and then move on with my day, right? Make some content, trade some stocks, do whatever, right? Do whatever. Enjoy the day, right? So that's kind of what I'm doing. That's kind of a little side tangent, whatever you want to call it there. Kind of in regards to more long-term psychology there. Maybe not looking at your portfolio every day. It's probably a good idea. Let's see what else we have here that's moving. We have Meta down 6%. Oh, wow. So it looks like big tech. Big tech is not doing well at all today. Like we talked about in the intro, the NASDAQ is down 1.5%. So let's do a quick run through on those, and then we'll end the video. If you guys are still here, hit that like button. I appreciate you all. So look, Meta's down 6%, and this is not good for the bulls. I mean, does this not show a clear as day rejection on Meta? I mean, look at this, guys. Look at this. Clear as day rejection here at the trend line. Bears are still 100% in charge. This is really holding on by a thread right now above this, above these moving averages. Meta's on the verge of another collapse. And this is coming from somebody that owns Meta. The beautiful thing is, guys, I could talk objectively, right? And that's what I try to do. Sometimes I have some internal bias, if I own a stock, and some people won't even tell you that, but we all have our own biases that we don't even know about, or we don't even realize at the end of the day. Sometimes, we have that, but I try my best on the channel to be as objective as possible. And if we're looking at this, it's clear as day, guys. This is selling off, right? Bears are still in charge. We're on the verge of collapsing. If this thing falls under 115, 110, man, bye-bye bulls. Not bye-bye bears, bye-bye bulls, right? So Meta's not looking good. Apple is down as well, 1.4%. This chart looks like crap. I don't even want to get into it. I mean, this chart right here, the past couple of weeks, yeah, we do have a bit of an inverse head and shoulders, but talk about ugly, choppy trading. I mean, I don't even know how else to put that. Amazon's down another 2%, which Amazon, guys, I'm not sure if you realize this, it's right near the lows. I mean, this thing has not rallied at all. I mean, there's some stocks that are off the lows. Amazon's not one of them. And I'm talking about just from the past couple of weeks, there are stocks that are off their lows. Amazon is right at its lows. You can see here it hit $85 on the 10th of November. It's about a month later, where a lot of stocks rallied in the past month. Amazon's about $3 from those lows. And we're probably going to test them, if not, maybe even take them out. I think that's possible. So Google right now is down another 2.5%. This is another one that I own, my biggest individual stock holding. I love this company, but I could look at it and be like, yeah, the reality is we're probably going to start, if we give out at about $95, there's probably going to be some selling pressure coming. There's going to be a move maybe back to the 80s at that point. We just have to be real with ourselves here and understand where we are. We're in a bear market still, guys. Microsoft looks decent. Out of all the tech charts, I think I covered this yesterday, this one looks probably the best in the short term, but even this, it needs to break 255, which we clearly failed at, and now we're at 245, and we're clearly not getting any buying pressure today as Microsoft is down 1.5%. So I have my doubts, I have my concerns here, and I'd love to know yours in the comments down below, guys. These are just my thoughts on a couple stocks, on the markets, and kind of where my head is at. A little psychology there. So if you enjoyed the video, hit the like button, subscribe. Make sure to check out my Patreon and get your 20 stocks from Moo. It's a limited time offer, guys, with at least a $100 deposit. All the details are linked down below. You could also get 12 stocks from Webull. And guess what? That's also linked down below. So I'll catch you in the next video. I appreciate you guys as always. Without you, this would not be possible. I'll see you later. Peace out.